Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap. It is the 29th of July. It is a Monday, pretty boring day. Broadly speaking, in the market, seemed like everyone's maybe waiting for that Fed announcement this Wednesday, at least for the start of the week, right? Slow start here, and hope everybody had a great day, both in and out of the market. Had a fantastic weekend. Hey there, Fortino. Hey, Johnny. Always good to see you, my friend. Hope you had a great weekend. It went by quickly, and summer, very summer-like. And happy Monday to you as well, Linda. Great to see you, as always. Broadly, it was boring. It really was. You did see Pfizer is going to spin off / merge their off-patent, aka generic drugs, with Mylan. Pfizer was down pretty, not big on that news, down a little on that news. Mylan had a nice pop on that news here, but really it was kind of a dull day for the most part. And welcome out, Scott. Hi, Patricia. Great to see you guys as always. It should get a little more interesting from here. We have Beyond Meat reporting earnings. It looked like it was a mixed bag. I'm not a Beyond Meat person, as you guys know. That's a little too volatile for my tastes overall, but it does look like a little bit of a mixed report. But they did. It looks like guidance was decent for the rest for 2019. So that'll be an interesting one. Fairly light on the S&P companies reporting here tonight. Illumina, Dish, a couple interesting names, NOV, but nothing too terribly dramatic. But 30 coming out here tomorrow before the market opens. Much bigger cast of characters: Procter & Gamble, MasterCard, Merck, Eli Lilly, Altria Group, Conoco. So we've got some big names ahead of us going into tomorrow. As we kind of talked on Friday, there's over 150 S&P companies. Most of them haven't reported yet. So it is going to be another big week on the earnings front. Broadly speaking, gapped down a little bit on the open. For the very first part of the trading day, you did see a little bit of profit taking or selling, but it didn't last very long. As you can kind of see, really after that first hour, we really just kind of started to drift up a little bit, and then basically the second part of the day took it off. It seems like, let's just call this one early and go fishing. And welcome out there, Adib. Great to see you, my friend. Hope you are doing well. So really not a whole lot of interesting things to report from a broad perspective here today. Still knocking on the door of all-time highs on the S&P 500. At this point in time, we are, very close to that Fed meeting. It seems like the market, we're pretty sure what we're going to see. So now it's just, do we actually see it? Factor all those other earnings, including Apple, coming out this week, and we're in one more busy week, and then hopefully we can kind of get back just to good old charting for the next few weeks after this one. So really not a lot of new exciting things to report on the S&P. Still, swing low becoming more and more important with each passing day, above all of our moving averages. Things are looking pretty strong still, at least in my personal opinion. Overall, over on the Dow, very similar. It seemed to have been lagging just a wee bit behind the S&P. Now, maybe Boeing is a part of that. I don't know. But for whatever reason it is, it's actually shaping up for maybe a nicer technical setup on the breakout side. We've now started to develop a very clear top that we can clearly identify, hey, if this thing breaks, there should be some upward oomph behind that resistance level. Broadly, overall, though, very much like the S&P over on the Dow Jones. Very similar. We did see a little more selling, especially early on tech here today, certainly on the NASDAQ as well. We did recover nicely, coming well off of those intraday lows. But early in the trading days, things were kind of selling. Tech was one of the areas that was getting hit the hardest. Maybe that's because there was more profits to take. Maybe it's more of aggressive place, or maybe that was just how it was all meant to be here today. But ultimately, a pretty strong rally off of the low. Nice little hammer. Again, we've got a little bit of a resistance zone that's placed, that's put itself in order here over the last couple of trading days. Beyond that should be another bullish signal, at least in my mind. And then over in the rut, continuing to do what we love it to do here at Tackle Trading, at least, and that's move a little back and forth, but don't go anywhere, right? And so another day, bumping our head on that same level of resistance. This is turning into an interesting breakout, potentially, if it ever can get above, just a little bit above 1580. We've developed a pretty clear top there, and we don't really have a lot of other stuff until we get into that 1600 range. As for another day, though, we've got a win here at this resistance level, so pretty much unchanged, broadly speaking. Really wasn't too much of interesting things going on. It wasn't a big earnings day. Overall, the last time we'll say that this week, but today was pretty light. See you, buddy. I'm still liking the way XLB is shaping up as a potential instrument. Generally I tend to look to the ETFs kind of to guide my hand, so to speak, and then look for stocks. But we still have some things coming out with earnings in this space, including Echo Labs, who are coming out tomorrow morning, finally knocking on that door of that break we've talked about. Just going to have to see how this one plays out, right? Nothing we can do about that. But a little bit of, it should be interesting. APD pushing, hitting a 52-week high. I don't think they quite held their breakout today. But on XLB, I mean, we've got a little bit of slowing momentum, candles getting smaller. We've seen two tails, first a red hammer, then a smaller green handle, followed by a doji here today. I think you could make a case that some upward movement, at least some people might be calling this a little bit of a pullback or a retracement, whatever your cup of tea is there. Do you think we probably need breaking something like today's high tomorrow type of a deal, because we haven't done that throughout this whole pullback phase? That could, of course, happen as theoretically speaking early as tomorrow. Should be an interesting one. I'm definitely going to be keeping an eye on this ETF as a potential. It's pretty mellow. I don't know, I'm sure some of you guys have traded these XLs before. Some of you may not have. They're pretty mellow, maybe relative to a stock, as a general rule. So I'm definitely going to keep an eye on that. Loving that doji, need a little upward movement. Over in energy, a little more selling. Now we did kind of come off of that same low area that we came off of when we had that brief breakdown on the intraday, giving us, at least in my mind, another data point that says if this support level gives out, that's going to be a bearish signal, at least in my mind. The second test, we won today, right? And we may continue to win, but if that does give out, I will interpret that as a sell signal. It is a pretty busy week, as you guys know, on the earnings side of things over in XLE. So hopefully we just spend another week, or at least most of this week, in the same trading range, and then get some earnings behind us and see some signals, some upward movement. I guess you could call it a support bounce if that was your kind of trading. Unlike last time, though, we've now created lower highs, which would throw some cold water on that. This isn't my style of trading personally, but I do understand it. But last time, it was, hey, we breached, but we held, showed some upward movement. This time we've created lower highs. That's always a concern, at least in my mind. So, hey, Amy, good to see you, buddy. So I'm going to continue to keep a very close eye on this. A lot of earnings, so that's definitely going to be possibly in play this week. On resistance, at this point we can use 64, where we've put in that swing high here. But even if we beat that, we still have this much stronger level of resistance in the 200-day moving average. So I'll be boring, still looking for the same things. Break above would be a bullish signal. Break below would be a bearish signal. I lean a little bit. If you made me do something, I would lean to the bearish side. But overall, I think it's still best to keep this in the neutral category personally. Did see a little bit of profit taking over in financials, which is not necessarily a bad thing. That's going to open up, potential pullbacks if we see a little more selling going into the next couple of days, or our breakout, such as on things like Jeffries, are still very much in play. Weren't able to break resistance here today, but certainly the breakout is still very much in play in many of the stocks that have those type of breakout patterns. We do have things like CME with some earnings this week, some of the insurance, but we have worked through the bigger banks over in the financials. So if we're looking for a signal, we can either, maybe we get a little bit of a pullback into the 9 or into, this old resistance zone, something like that, with a little bit of slowing momentum. If we break, to the upside, there's a lot of breakouts. Many of those banks, as you guys know, are looking something like breakouts, right? Maybe not, big major levels of resistance, but a lot of them have been breaking resistance. So if we take out, basically last week's high, I think that would be a little bit of a signal to the bullish side On the support side of things on the ETF, I mean, much like the S&P and many things within the market, we've seen enough upward movement for me to say, yeah, these lows that we put in now, a couple of weeks ago or Monday of last week, they can be trusted. They are our swing support levels. That should be a line in the sand. So as long as we're holding above that, at least the way it currently looks, I think we stay overall bullish within the financial sector. Over in industrials, a little bit of a pullback too. I prefer the pullback on XLB, but I kind of like this one too. I think this one has a little more overhead, in that $79 range. We've tested it here, we've tested it back here, but a little bit of a pullback, a little bit of slowing momentum. These dojis have been getting a little bit smaller the last couple of trading days, much like the material sector. Need to see some upward movement as any form of confirmation. May or may not want to use the ETF as the vehicle, but we can look to other areas within that. We saw CNI. I think we took a peek at them yesterday. They broke early and closed. They did sell pretty much off of their high, but that's not, depending on your perspective, not necessarily a bad thing. They closed above resistance. If they closed way up here, it becomes very difficult to potentially trade, at least in the very, very short term, by closing here. Maybe we need one more day of development to get, to kind of deal with, all the intraday selling come off of the top, because that candle doesn't inspire a ton of confidence for me. But a close above resistance is a close above resistance, right? So, and they were certainly not the only stock out there. On the other side of things, you've got Boeing continuing to struggle, although they are working into a support zone. We talked about this one, a couple, late last week. They're coming down towards the bottom of that zone. It's a messy one, right? We kind of talked about that. So that's going to be an interesting battle. If that support breaks, you'd have to call that a bear signal, I believe. If that support holds, well, it's held on a couple of occasions now. So while I wouldn't trust that support from a buying perspective, I would definitely respect that support. Boeing moving up would certainly probably not be a bad thing for the industrial sector as a whole. You also have CAT, who after kind of gapping down and going a little sideways on their earnings on that pretty big back and forth day, now we're working into these falling moving averages. We have to put in lower highs and lower lows, broke some support. This one might be one to keep an eye on in the days ahead. We've got lots of challenges ahead of us, whether it's the 9, the 20, old support, recent swing high. So there's going to be a little bit of a battle for CAT. Of course, we also have John Deere, who is knocking on the door of a break. Got right up there today, at least per my definition of rules, didn't break, but are so very close it could happen really, as long as we're up here any point in time. So there's some interesting things going on, both from a bullish and a potentially bearish perspective in the industrials. I think broadly speaking, we've got strong support levels above the moving averages, a little bit of doji. Again, need to see some upward movement. That's always going to be a big thing for me, but a little bit of a pullback has developed if we are interested within the materials or the industrials. Of course, we saw the NASDAQ come off of the 9 EMA here today, and to probably nobody's surprise, the technology ETF did the same exact thing. Really strong movement off of that 9 EMA, off of the intraday low, and it, it was a pretty impressive move overall. It was early, right? We had that selling right out of the gates, but negativity very, very early, especially in tech. So a really strong bounce back day, showing at least to me, showing how comfortable bulls are. They're looking for reasons. They might not always find them, but right now it really feels like they're looking for reasons, broadly speaking, and really in technology in particular. Really seems like buyers are just looking for a good reason to try to get into it. If we can take throughout these highs, certainly could be some interesting things. ACN, one interesting one from option stock. I think stock report. I think these are a little light on liquidity option wise. A little bit of a break, closing right above that resistance level. A little bit of follow through tomorrow could be interesting over in ACN. There's going to be plenty of others though. But some of our, we have, some of our semis, including AMD, got some earnings coming up here. I believe they're tomorrow night. I don't think they're tomorrow morning. So there are going to be things in the semiconductors that are, maybe having some, some impact. But speaking of semiconductors, another one of those nice little pullbacks, fairly orderly, coming off of a low here today. So certainly might be something, from a pullback perspective in some of these semiconductors, if we are inclined to believe that they're going to continue this overall strength that we have seen as of late. So pullbacks are starting to develop, within certain areas of the market, whereas breakouts are still very much in play in certain other areas. And so this feels like it's a challenge, so many earnings, but it really does feel like it'll be a stock pickers type of a market. Pick your sector, pick your industry going into strength or weakness. Over in the staples, knocking on the door of another break. CL, another big mover here today. Again, stock option report, I can't remember, but broke through early in the trading day. Ton of follow through, pretty good volume as well. I think we also had EL. I know we were talking about it on Twitter. I don't know if you're out there, Thiago, but I know you were setting something up on it when we first were talking on Twitter a few days ago. Nice little upward movement as well. Continues to be a pretty, you guys don't need me to sell you too much on it. I didn't love its pullback, but that was then and this is now, right? It wasn't showing weakness. It was just not pretty, right? You look at something like, at least so far, the pullback on like the semiconductors versus the the pullback in the staples, it was a little more choppy, down, up, down, up. I like my pullbacks a little more orderly. Personally, that's not here or there, right? At the end of the day, nice upward movement off of support, challenging resistance. We take that resistance out, could be another bullish signal for us over in the staples. Saw some movement in utilities, but again, I'll sound like a broken record. Lots of earnings coming up with these guys in this or next week. Overall, within a broader range, have those moving averages, that 20 kind of sitting right above us, a ton of resistance at 61. So for me, I continue to be looking at this bullish but neutral. I'm overall bullish, but still very, very neutral. Between 59 and 61, I think you have to be there. And I just turned my head over and I saw my dog trying to eat my new cat hat. Hey, you, don't eat my new cat hat. That's the beauty of being live on YouTube. I can't let him eat all of my caterpillar hats. So there we go. So back to utilities. Things are looking very, very much the same. Lots of earnings. Keep an eye on that. Obviously, 59.61 have been in play time and time again over the last little while. Until that stops, I believe the best thing to do is assume that's going to be the case. Over in healthcare, a little bit of upward movement here today. Like we said at the beginning, my lawn is basically it's an all stock deal, and you're going to see Pfizer's off-patent drugs merged in with Mylan, and that's going to, they're going to make a new company on that side of things. The response to Mylan, of course, the company that's kind of getting bought, so to speak, I think it was like 57.43 Pfizer to Mylan at shares. Don't quote me on that. I think that is right, though. Nice positive move on Mylan. Not a lot of follow through or anything along those lines. Pfizer was a little less pretty, at least the response. Now, that's not terribly unsurprising. You will see the acquiring company drop. You guys have seen this a time or two, but breaking through that support level, not a particularly great look, at least in the shorter term. We've created lower highs, lower lows, so we're going to have to be a little bit careful. Of course, we have Lilly with earnings. We have Merck with earnings going into tomorrow. Tomorrow's open, so big, there's newsy stuff this week, especially right now over in healthcare. I think you could make a case that this support level, at around this 91.50 range is something that you can look at and try to be trading, the sector kind of sideways, coming off of support, working to resistance. I don't think I would make a case against that. Overall, I'm continuing to be pretty careful, though, on that. We are, on the other side of it, if we want to be, too picky, and this is why I hate charts where you can kind of see what you want, we have kind of made some lower highs and lower lows, and maybe this is just a really ugly retracement. I wouldn't make that case, but if I didn't like healthcare, I could see my bias being able to find a way to like that. So individually, I think that's the way we treat everything in healthcare right now. I'm not really thinking about the sector helping or hurting me one way or the other. I just want to take it on a case-by-case basis. I know we've talked holics a few times here as of late. Another great breakout here today. this is just me, another way for me to complain easily. Really good breakout with earnings in a couple of days. So at least from a swing perspective, not much you can do about it. We're almost done having to have that conversation over and over again. There's some interesting things out there, but again, we have to be a little careful. Some mixed signals, I believe, at least technically, over there. And hey, Jimbo, good to see you, buddy. And I saw you hanging out with Matt on Twitter. Like, oh man, that couldn't have ended well. Well, I probably know how that ended. So, but it looked like you guys were having a good time. Not a lot of resistance though. If you are so inclined to believe in this support level, if we're going to have lots of little things, of course, short term, most notably the 20 SMA. But if we are sideways, that 20 shouldn't be as big of a deal as if we are trending. So I could see an argument on both sides, but I think the argument when you can see them on both sides is to be very careful. Matt and I were roomies in college. Absolutely. Yeah, we had some crazy adventures in our early days. We still have some adventures, but they're less crazy nowadays. I've known Matt more than half of my life now. As crazy as that is, it doesn't feel like I'm that old. I feel like I'm a lot closer to his, the age I was when we were roommates, when that was really half a lifetime ago at this point. So, yeah, we were. Yeah, we had some good adventures. We'll have to tell you about them one of these days. So a little bit of downward movement in the discretionary, but a big part of that, of course, is Amazon, right? Certainly, going to be a big component of whatever they're in, whether it's the NASDAQ, XLY here, a little more downward movement, testing this 50-period moving average. Technically, I think this might be an important battle in the very short term, not for a trade. I don't think there's anything to see here, at least from a directional point of view right now in Amazon, but it's always easier when Amazon's not dragging on things, right? We've seen that they did it a little bit today, on the overall ETF. We are still getting a little bit of a pullback here. And Jerry, we'll take a peek at them here in just a moment. A little bit of pullback going on McDonald's post earnings. Going to need a little bit more development, I believe, in the days ahead. But I'm happy. Not going to hold a McDonald's or anything through earnings. A little bit of a pullback could be something for us to peek at. Starbucks took a little bit of a day off today after their pretty solid response to earnings as well. Home Depot continuing to work its way up to resistance. I know some of you guys were playing into that Home Depot pullback. Keep an eye on that just as a short-term level of resistance. Obviously, still got a couple of weeks until we get into earnings. I'm not too familiar with KEX here, Jerry, but we'll go take a quick peek at them here. Oh, this is Kirby. So Kirby, was this earned? So it looks like this was an earnings. So it looked like they gapped down on earnings, had a big snapback on Friday, and a doji here today. I think without knowing exactly kind of what, kind of any news or anything like that, Jerry, I think you have to be careful. There's going to be some layers of challenges above them, most notably in the very short term, that 50-day moving average kind of sitting right above us. It's always a little off to me when you see that quick of a about face on earnings. I mean, this was a big gap down on that first initial response. And then the next day, everybody thought it was the sweetest deal in town. And it showed some pretty good strength. I mean, top to bottom, that's a huge candle. Pretty good volume, not relative to earnings day, but normal. It looks like it was pretty relative, pushed right through some short-term stuff. So whenever I see something that's kind of has that much volatility in the response to earnings, I immediately put on my protection goggles, and I want to be really, really careful on either side of it, whether it's bullish or bearish. I think you have to be a little bit careful. Very volatile in response to that earnings. Keep an eye on that 50. That could potentially be a resistance level, a break above that. I would interpret at least as a little bit of a bullish signal. I think, for me, and this is just for me, obviously, I think there's easier and better charts to trade out there than Kirby right now. But that is an interesting response. And if we see a little bit of development, I think there could be something. But now it's one of those, we're below the 20, but we've now got this skyrocketing 9 EMA to kind of act as a little bit of a support catalyst, potentially developing into a pinch. I think from a trading point of view, the best thing would be a little bit of back and forth throughout much of, if not all of the rest of the week before getting our signal late this week or early next week. So that's a tough chart. That is a tough chart. But certainly, industrials, I do like where industrials are at. So I do like the sector there. So hopefully that gives you some ideas. I think it's a tough chart, and I'm not afraid when there's things that on both sides to kind of walk away. I learned that lesson the hard way. So at least for me. And you betcha, my friend. Over in the real estate, we broke through resistance. I don't think that's a great signal, although you could interpret it as one. We did smack into that 20 SMA and we're pushed down off of that here today for at least one more day. That's going to be a deal. More than that, I think it kind of gives us a little more reason to believe that this, especially on the support side of things, we've seen a little bit of upward movement off of that support. I want to see the REITs and real estate as a whole go into a little bit of a triangle pinch here, going into the next little while, and then break out of it. I know that's asking a lot, and you may not even want that yourselves, but that's what I want. I do think at this point in time we have lots of earnings, right? This is another big earnings week for the REITs, so we got to be a little bit careful on that side. They're not historically a crazy movers during earnings, but you never know, right? You never know how that's going to play out. I'd like to see us at least get through and this week, and then start to look for some signals. Right now, I'm kind of putting them in this little developing, I don't think we can say it's there yet, but developing triangle pattern. Right now, if we're thinking bullish, I think we need to take out that 20. We failed at it here today. If we're thinking bearish, I think at the very least we have to take out this trend line. I'm not bearish, at least until we get a little more clarity on, I won't be bearish. Let me rephrase that. Of course, I'm not bearish today, but I wouldn't be bearish to break of this trend. And if this develops for the next 2.5 weeks and we continue to pinch in here, that would be a different story. But as it is right now, anything above 36, I'm staying, neutral or bullish. But if this support zone does give out, that would be a little bit of a signal on the bearish side. Enough to go bearish? I don't believe so, but enough to, be a little less cautious, a little more cautious as a bull. I absolutely would agree with that take. And lastly, over in the communication services, losing today at resistance, no big deal. Resistance is tough, right? This is, of course, that all-time high, so not a big deal. Got a potential break. We've got EA. I want to say EA are coming out tomorrow after the close, if my days are right. Seeing some movement, bouncing off of a little bit of support here on that earnings. Facebook giving out a little bit on that 200 level of support. Again, is this a strong bear? No, but I think it's less bullish than it was even a week, even on Friday. Now all of a sudden we've broke support. We're below, the 20 and the 9. That 9 is starting to creep below us, potentially acting as a resistance catalyst. From a bullish point of view, I think we have to reclaim that before we can get too terribly excited. Of course, that was a breakout not all that long ago. We've got things ahead of us, most notably the 50-day moving average. There will be things on other time frames as well. So I don't know that that's a strong bearish signal, but I would call it a bearish signal, especially with some follow through tomorrow. If we take out today's low tomorrow, I think we have to be a little careful. And of course, that can impact the ETF. Don't think Facebook's going to be very friendly to trade in the very short term, whether you're bullish or bearish. Personally, Google took a little bit of a day off here as well, but holding up post earnings. If we see Google, take a little bit of a pullback along with Facebook continuing that little break of the breakout, there could be some short-term issues. Of course, on the other side of things, Disney breaking through resistance here today, a week till earnings. So I don't know how many favors that's doing if you're not already here, but did see some decent movement over there. Dish reporting earnings here tonight. So not a huge week. We kind of, the big names were last week, right? The big names are Google and Facebook for sure. I think you could make a case if you're talking long-term, Jimbo, on covered calls on Facebook. If you're talking short-term, i.e., I'm going to go buy some shares today, if this is part of my long-term portfolio, yeah, I think you could make a case, because I'll always make a case that if I think something's going to go sideways or potentially drop a little bit on something, in the long-term portfolio, I'll always, make a case at least for selling covered calls against it. So long-term, I would absolutely think that, yeah, this is the type of signal that might get me thinking about that until I kind of get back into the bullish, a lot of nice bullish signals and I'll protect myself a little bit from a little bit of a pullback. If I'm thinking about setting up a new trade or something along those lines, no, I don't think this is a great time, technically at least, to be buying into Facebook. So I wouldn't want to set up what effectively, is a bullish trade effectively, right? It's neutral too, but if we have to, if it's bullish, that's not the end of the world, right? When we're doing covered calls. So I don't think it'd be something good to set up in the short term. Oh man, yeah, that's crazy with the IPO price. Well, I don't know what kind of crazy things I'd be doing, Jimbo, in that scenario. But yeah, anytime I expect weakness, it's part of the long term. Because short term, I would say, yeah, this is a signal that any downward movement would stop me out. But that's short term and not long term at all. I can't have that philosophy, or you would have not still had Facebook at its IPO price, right? So I think you could make a case, though, in signs of weakness, with things in that longer term portfolio, to look to sell some covered calls against those shares, whether it's Facebook, whoever else it might be. If we're not expecting it to go up, well, I think the responsible thing to do is at least consider selling, doing some cash flowing off of it. So, so for me, yeah, I think it would make sense to at least look into it. Obviously, the actors get to, yeah, I'm not doing, but at least thinking about it. I think it makes sense. I like that you're thinking about it personally, Jimbo. So nice job there. So there we are. Not a ton of things, but we're getting some interesting developments, pullbacks in semiconductors and materials in particular. Both of those, they're not done yet, or at least we don't see the signs per my rules, but they're out there. Industrials are out there as well. Still have some breaks on things in the discretionary, in the financial. So there's some interesting things out there for us. Both really whatever kind of things that we're looking for. Sure, it's a lot easier to find bulls right now than bears, but even bears are out there. That fighter chart's pretty bearish. I don't know, that newsy stuff tends to get me to shy away, but that's a pretty bearish looking chart. So yeah, and covered calls are an important part, in my opinion, Jimbo, of a long-term portfolio personally. So I love that you're thinking about it. You never want to go jump in and do things that you're not comfortable with, of course, but love that you're thinking about it. And I imagine it's not too far down the road till you're going to be doing probably a few more covered calls. Once you kind of get into them, they're a lot of fun. At first, they're not the very exciting thing right out of the gate, right? It's a lot more fun to by a 3-day breakout or whatever. So at least for me, it was. On the dollar, we're knocking on resistance. Now, this is a pretty big level of resistance, so we should expect a little bit of a battle. We don't really have any signals from the bearish side on anything other than very short-term time frames. You did get some on the 15-minute chart here, topping out, making some lower highs, lower lows, but that should be expected. That's a pretty big level of resistance. When we look at it, say on an hourly time frame, still looking a little bit like a pullback. Any new, any new bullish plays, I think you want to make sure you're above that resistance level. I think you need better signals to go bearish. But if you made me trade the dollar, I'd go with history right now, and the history says go bearish. This level of resistance has been strong over and over and over again. Luckily, we don't have to trade like that, but I do think we should respect this resistance zone at least until it's broken through, or until we have a reason not to, because it has just been too strong as of late. Over in the metals, a little bit of a pullback continuing to develop in gold. It's not quite where I want it to be, but at the same time, any case for gold right now from a bullish point of view, I would not fight against. And I'm not much of a Forex guy, Jimbo. I tend to stay away from shorter term time frames. I really am more of kind of what you would probably, or most people would call, a swing trader. I tend to, and Forex just moves a little too much. I don't really feel all that comfortable swing trading it. And that's probably a personality thing for me more than anything. I'm not opposed to it, but it is certainly not an area that I focus or probably ever will. And you never know the future. But as of right now, it's certainly not an area I focus on, and really don't have strong opinions to do it, at least for the foreseeable future. That's a great area, though. It is. There's a lot of great things you can do. I guess I'm kind of a stubborn old man now, Jimbo. I like what I like, and anything new. Do you trade Beyond Meat? No. Do you trade Bitcoin? No. So anything that's not dull, I tend to shy away from. So yeah, I am really more of a swing type of style. I like to give things room. I like to be comfortable, so that really that chart has to say, yeah, dude, you were and it happens. Unfortunately, it happens. Yeah, it is. There's some definitely nice things about it. You do have to get, it'll depend. There's a couple of different ones at Jimbo. It will depend. There are some smaller ones and larger ones too, I believe. So it'll depend on kind of where you are with your broker. But yeah, there's leverage. For me, there was a time where I thought I'd really want to be an intraday player. And you don't have to be an intraday player to trade Forex, but I feel like you'd have to. And quite honestly, any intraday stuff, I much prefer gold, silver, natural gas. I much prefer the commodities market. Granted, I am more comfortable and familiar with them, so that's probably part of it. But for the intraday stuff, I already kind of have those. I don't do a lot of that anymore, but I much prefer, gold, silver, natty gas, even the S&P futures and E-minis type of things as vehicles. So that is where I am. I know Cody and Maddie are both. I never really got into it though. That's what I love about trading. There's a so yeah, I prefer futures. Yeah, Jimbo, I prefer the futures contract, especially for intraday stuff. Like I said, I don't do a lot of intraday stuff nowadays, but that is where I go when I want to do intraday stuff, whether it's on the commodities or on the E-minis. That's where I tend to go if I do have a little extra time during the day and want to hang around and do some intraday stuff. I really like the futures market for that. But again, that's just a personal preference. Kind of getting back to work, because you guys probably don't care all that much about what my preference is, but thanks for asking, Jim. I hope it gives you something to think about. Got a little bit of a pullback developing in both gold and silver. Not as pretty as we would like, but again, it has shown a ton of strength. So as long as you like what you're seeing and it's fitting your rules and systems, I wouldn't argue. A little bit of a pullback, a little bit of a doji day. I think you could make a case, especially with the strength in silver, that any upward movement could be met with a lot of excitement from the bulls. That's what their MO has been as of late. Overall, both of them continue to remain pretty strong. There are some pullback opportunities if you are interested. I don't know that everybody's going to be. I don't know that they've sold me just yet, but overall, I am looking at it from that perspective. On the other side of things, yeah, you can always go, always go play with the ETF. So as well. So if that's a preference for you. And I do prefer them for the swing style of trades. It really is only intraday, Jimbo, that I like the futures personally. Much prefer to be able to cash flow things or credit spread things, or things like debit spread things. Sell short-term options against longer-term calls on GLD or something like that. That is my preferred style. Over in natural gas, it just no rest for the weary. Another rough start to the week, breaking another support level. Again, it's bearish. Not much exciting to say other than, yeah, it just continues to struggle some more. And it's going to continue to do so until we start to see some sort of bullish signals, right? It tried. We had a little bit of a bullish signal, back at the beginning of July. We lost though, right? We lost at that breakdown point pretty dramatically. So as of right now, the bears are in firm control. So yeah, and I agree, Johnny. I always like to hear what other people are doing too, just to get my brain thinking. And there's no such thing as two of the exact same traders, but I do like to kind of poke people's brains. I certainly do understand that side of things. Little upward movement over in crude. Again, I don't know exactly what you do with this if we're not going on to an intraday level. A lot of overhead, a lot of falling moving averages on the daily chart. On the hourly chart, starting to show some signs of life. And you can kind of see here, I've got a little bit of a break, and maybe I'll add a line here. You guys know how that always goes live and in person. Got a little bit of resistance, not too terribly far ahead of us. Certainly a little bit of a breakout potential if we're moving over into looking to trade on the intraday level on crude. From a swing point of view, I maintain it's messy at this point in time, and it's not a great place for directional trades. It's been a really nice place for cash flows. Cash flow plays and probably intraday plays, although that's not how I've been playing. I've been looking at it from a cash flow point of view personally. That's really where we are until we get some clarity. Again, a break below our support zone, and you could call that, you could call it the low, and you could call it a little bit lower. I've heard different numbers from several different traders, but we're all looking at this area. That gives out, we expect to see some weakness beyond that, beyond that point. On the other side of things, if we hang out a little bit longer, if we can actually start to put together and build on that little we saw kind of develop on the hourly chart, it's not pretty, and we've got these weird layers of moving averages on top of us. But if we can hang out just for a few more days and then break through it, there might be something from a bullish, from a bullish point of view if we can break to the upside. I'm not there yet. I think we need to have a very clear ceiling before we say something like that, but maybe that will develop over the course of this week. There is some space here. If we do believe in buying, if we were to break resistance, there is some space, between, what all of this stuff, the swing, the moving averages, and that next level of resistance. So might be something developing, but probably need a little bit more time before we get that from there. So and yeah, absolutely, Johnny and Jimbo. Yeah, natural gas is just going to be natural gas, the commodity that you're trading over in the futures market, whereas UNG is going to be the ETF that tracks natural gas. So, here's the actual futures contracts on natural gas. And then if we want to, wow, these guys are terrible, let's go sell some bear calls, on them right now, or buy a put on them right now, or whatever. Or maybe, hey, we think this is the bottom, let's go load up and do something on that side. Although I don't know why you think that. That doesn't matter, I guess. What I think, UNG is actually going to be the ETF that tracks NG or the contracts on natural gas. There are a few option contracts on futures that you can work with as well. A little bit different, but at the end of the day, an option's an option. But a lot of people like to turn to the ETFs for those type of trades. I tend to be one of them. I tend to prefer the ETFs for those cash flow trades, because I really like the idea of being able to sell something against something that you might own. Right, whether it's selling calls against your stock, selling an option that expires tomorrow against your long option, whatever it might be. So I like the flexibility and the comfort. A lot of it's comfort. You never want to be worried, losing sleep at night or anything. That's not worth it. No trade's worth that. So, ladies and gentlemen, that is going to do the market recap for today. But it's going to be another big week of earnings. This is pretty much, fairly dull today, but it's over tomorrow. You saw that over 30 tomorrow morning, reporting some big names. Just over a half dozen of the smaller S&P companies reporting here today. After the market close, should be interesting to see the response to Beyond Meat. I'm not that it'll matter to me, but I'll be interested in seeing how the response plays out. I know that's been a pretty crazy ride over on Beyond Meat for a lot of folks. So happy for people who have been taking advantage of it from a bullish point of view, and absolutely, jealous on one hand, but not all that jealous, because that's not my cup of tea. So you're very welcome as always, guys. It's my pleasure. Appreciate everybody joining me here. So yeah, on UNG, it's basically like trading the stock, Jimbo. The best way I can put it, trading the ETF, it's just like trading the stock. I mean, when you're trading, a chart is a chart, right? You're making your decisions based off the chart. On something like UNG that's tracking specifically natural gas, or GLD that's tracking specifically gold futures contracts, you're just going to play. I like to look at the actual chart for the commodity and then build the trade on the ETF personally. I know some people will just look at UNG and not NG at all, or gold, or whatever it might be. I like to look at the actual commodity, and so I can kind of line them up, so to speak, in my brain. But it really is just going to be trading like trading the stock from there. So if you want to go play UNG, whether it's as a bull or as a bear, whether it's just stock or an option trader, you'll go through the same process that you went through for everything else. The only real difference, like I said, is going to be the vehicle. They're both tracking natural gas. They're both tracking the price. UNG is not open, 24/7, 24/5.5 or whatever, like the futures market is. And that's why you see the gaps. That's why you see the gap opens and things on the ETFs like GLD and UNG and so on and so forth. But they're really designed to specifically track the price of that commodity. So I hope that makes sense, Jimbo. Maybe we can talk a little bit about more one of these days, or you can hit me up on Twitter if you have any questions there. So hopefully that gives you something to think about there. As always, guys, I appreciate everybody's time. It's a lot of fun hanging out with you. Always more fun to go through this process with you guys than on my own, especially right now, where, man, it just seems like a lot happened today and yet nothing happened today. So that is the nature of the earnings beast. I'll be doing the onboarding webinar to meet with our new members of our Team Tackle here this evening. So if that's you, looking forward to chatting with you. If it's not, of course, I'll see you guys same time and place here tomorrow. As always, let's see here. And what else do we got? Well, hey, if you are new to the channel, you know that we're glad to have you here. We appreciate you watching. I always encourage you to hit that subscribe button, that notification bell. Always got mad love for our pro members. And if you're not one, we'd like you to have a chance to see what we're all about over at Tackle Trading. So head on over. We'll get you hooked up with a free trial so you can come see what we do over here. We do have a lot of fun. We work hard, but we have lots of fun in the process. At least I do. So at least I do. Of course, you can always find me at Frank Martin23. Be sure to follow us at Tackle Trading on Twitter, at Tackle Trading on Instagram. And if Facebook's your thing, it's not my thing, but if it's your thing, pretty active over there as well. So thanks a lot, guys. I will see some of you tonight. I'll see the rest of you tomorrow. But as always, guys, thank you so much for your time. You guys have a great Monday night. We'll see. It's going to be interesting. Lots of earnings, big names. Some of my favorites. I mean, Merck. Ooh, that's a fun one. I'm really looking forward to that one. ECL. Ooh, I'm really looking forward to that one. So a couple of my favorites reporting here tomorrow. So should be interesting one way or the other. So all right, guys, thanks a lot. Get out of here. Have a great night, and I will see you tomorrow. Bye, everybody.